I think there's only one universally acknowledged digital commodity in the world.
Okay.
Right? There's only one. There's Bitcoin. I've said that, right? There is no second best. I've implied that and said that, and I've spent $33 billion based on that. If you understand the economic theory of a crypto commodity, you could create it. It's just very unlikely at this point you can ever create a global money that's a crypto commodity because Bitcoin has $1 trillion of smart money behind it. And the next best thing doesn't have even 1%. I mean, less than 1% of that.
With over $1 trillion in committed capital, Bitcoin has firmly established itself as the world's only recognized digital commodity, according to Michael Saylor, executive chairman of MicroStrategy. Saylor, who has invested $3.3 billion into Bitcoin, emphasizes that this status isn't based on opinion, it's a market-driven reality. In his view, Bitcoin stands alone. While others may attempt to create new decentralized assets, Saylor argues they won't gain the same level of trust or capital. Bitcoin has already achieved global recognition, and no other crypto project even comes close in terms of institutional backing and financial commitment. The market has made its decision, Saylor says, and it's not waiting for another contender. Bitcoin has become the digital foundation for serious capital allocation. Stick around until the end of the video as Michael Saylor shares even more insightful perspectives on why Bitcoin remains unmatched in the world of digital asset.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
David Sachs, the crypto czar, went on the All In podcast. And on the All In podcast, he said unequivocally that the U.S. government only recognizes one crypto asset as being decentralized. So what Sachs said was Bitcoin is a decentralized asset, a store of value. That's why it's in the Strategic Bitcoin Reserve. It's the only one. And so what you had was a member of cabinet responsible for digital assets policy, in essence providing very clear guidance that Bitcoin is a digital commodity, an asset without an issuer. And that's the policy of the United States and the President of the United States. And of course, the President directed that should come to his desk by August. He said, I want to see it by August. He's actually said, in the first executive order, he said within 6 months, so by late July. But
so, Michael, if I'm understanding this, you don't think any other cryptocurrency qualifies to be in a strategic reserve in the United States other than Bitcoin because of its decentralization and it has no issuer?
I think there's only one universally acknowledged digital commodity in the world.
Okay.
Right? There's only one. There's Bitcoin. I've said that, right? There is no second best. I've implied that and said that, and I've spent $33 billion based on that. So yeah, it was my view 4.5 years ago, there's one digital commodity. But Christine, there's a more important point here. Even if there was a second, third, and fourth, like let's take the fork wars, Bitcoin Cash, Bitcoin Satoshi Vision. Even if you fork Bitcoin and you maintain that's a commodity, they're all going to zero if the use case is store of value or money, right? Because if you were to fork Bitcoin and claim it's decentralized, the free market is going to pick the strongest network and it's going to be monetized and everything else is going to zero. So it doesn't matter from a practical point of view. My position is not that you couldn't theoretically create another digital commodity. It's a very powerful financial lever. And the companies in the United States, like my company, they're capitalizing on Bitcoin. They're going to be worth $20 to $40 trillion just on their Bitcoin assets if they continue to capitalize. So understood as digital capital, Bitcoin is enriching the corporations and the government itself, depending upon how much Bitcoin those entities own. That's the first metaphor. You know, the second metaphor is Bitcoin is digital property. If you think of it as gold or cheese, nobody rents their cheese or mortgages their cheese. But when you think of it as owning 100 acres in Manhattan, If your family owned 100 acres of Manhattan 100 years ago and you owned it this year, and I asked you, what's your family doing with it? You know, how are you going to pay your bills? You wouldn't say, well, we're going to sell our property in Manhattan. You would say, we're going to rent it, we're going to develop a building on it, or we're going to borrow against it. We're going to finance it. And so you would generate billions and billions of dollars off of 100 acres of real estate in Manhattan without ever selling it. It's property. And, and so Bitcoin as property means you will be able to rent it, finance it, or build businesses on top of it in the cyber economy. That would be worth $10 trillion to the United States in 2045 each year, right? We could generate $10 trillion off of the digital property that the United States buys in the strategic
to pay off
Bitcoin
the
reserve.
national debt?
Well, you wouldn't be a national debt. You would basically flip from being a net debtor to a net creditor, and you would generate yield. So that's a very powerful idea. Just like, you know, the company that owns $100 billion worth of real estate generates billions and billions of dollars of rental income a year. Or if I have $100 billion of capital, I can generate $5 billion a year just loaning the capital out. The point is, everyone that's tried it has failed, and everyone that tries it probably will fail against Bitcoin. Bitcoin is the winner. It's the orange dwarf. It's got the network effect, and it is the most powerful global capital asset and global property asset. So if you think about, let's take every country in Africa. You think there's a country in Africa that can launch the next Bitcoin that won't collapse against Bitcoin? Now take every country in South America. You know, is Brazil going to be able to launch an asset that you would want to own more? No. Now take every country in Europe. The euro is the second largest currency and the best currency in the world other than the dollar. 99% of the demand for digital currency in Europe is for the dollar. Okay, so the Europeans can't even compete against the dollar. Will the Russians be able to launch something? No. Will the Chinese? No. Why? Nobody in China wants to own anything in China, Christine. How do I know that? Because there's a law, right? The Chinese make it illegal to move more than $50,000 of capital a year outside of China. If the Chinese drop the capital control, all of the capital in China would flow out of China. And so there will be geopolitical jostling, but Bitcoin is already the winner. It's reached escape velocity. And if the US government begins to acquire it aggressively, not only are they a beneficiary, but they will force every other country on earth to adopt Bitcoin as the global capital. In fact, what will really happen is the Japanese, the Canadians, the Mexicans, the Brazilians, all the Africans, all the Europeans will immediately, well, not immediately, they will inevitably, is the right word, inevitably begin to convert their physical and financial capital into digital capital on the Bitcoin network. It becomes a fait accompli. They almost can't stop it, right? So it's one of those geopolitical moves that when you embrace the network, you force all of your allies first to adopt it, and then all your enemies have to adopt it.
Michael Saylor compares owning Bitcoin to owning land in Manhattan, not something to sell, but to rent, develop, and borrow against. He believes the US has a chance to generate trillions in annual value by treating Bitcoin as digital property, not by liquidating it, but by integrating it into the financial system and letting it work. As Saylor puts it, that's how a country can shift from being a net debtor to a net creditor. Attempts to replicate Bitcoin have failed, and Saylor says the reasons are structural. Bitcoin's unmatched decentralization, security, and market dominance make it the only true contender for global digital capital. While other nations may attempt to launch their own versions of digital currencies, demand, trust, and capital remain firmly rooted in the Bitcoin network. According to Saylor, this network has already achieved escape velocity, meaning its momentum is now self-sustaining. If the US acts quickly, it won't just gain a competitive edge, it will set the pace for allies and rivals alike. Now, let's hear more of what Michael Saylor has to say as he breaks down Bitcoin's role in shaping the future of finance.
There's 4 different metaphors for Bitcoin. There's digital capital, there's digital property. The third important metaphor is it's a digital energy network. And the AI economy is going to be built on digital energy by moving energy, money at the speed of light, at the speed of a computer. It's a $100 trillion economy. There is one digital energy network. If you own it, if you control it, you control and participate in that $100 trillion economy. If you don't, you're locked out of the economy. The AIs are going to think 1,000,000 times a second, and they're going to want to trade 1,000,000 times a second with each other. You can't do it without a digital monetary network, and that'll be built on Bitcoin as the settlement network. So if the entire future of the banking system and the digital commerce system and the AI economy, it's all going to be based upon digital money, digital energy, digital capital. And so that's important. And then the fourth metaphor is it's a digital defense system, because the measure of power in cyberspace is the exahash. If you want to create a system that can't be corrupted, censored, tampered with, or hacked by an AI or by another computer, you need raw power combined with the power of cryptography, a wall of digital energy or encrypted energy. And so if I wanted to send $10 billion into a war zone, the only way to do it is with Bitcoin. If I want to lock down a cyber system against cyber attack, where I want to authenticate it and make it tamper-proof, what you want is public-private key cryptography embedded into the Bitcoin blockchain, backed by 20 gigawatts of electricity, 850 exahash. No one can crack that, right? And we have a situation today where Satoshi could prove to you in 1 second that they are in possession of $80 billion worth of capital by simply signing a message with their private key. That has profound cybersecurity implications for the country. So when you put them all together, right, digital capital, digital property, digital, energy, and digital defense, what you can see is that you either are going to own cyberspace, and owning cyberspace is owning the asset and controlling the network, controlling cyberspace, or your enemy does. And if you lose control of your airspace, you get bombed back to the Stone Age in 1 week. You lose the country. If you lose control of the sea lanes, you lose the country. If you lose control of cyberspace, not only can you not send money between New York and Tokyo, you can't send money between New York and Chicago. You can't even send money between your computer and the computer in the same room next to you in a secure fashion. So in this case, the reason this is important to U.S. digital supremacy is the future economy is digital intelligence, and it's going to need to move digital energy protected by digital power in order to engage in digital commerce. And Bitcoin is that digital energy network, and that's why it's in the best interest of the U.S. to own it. If you had a tax that basically taxed everyone when they started a fire, or they used electricity, or they put gasoline in a car, you'd pretty much tax yourself back to a Stone Age barter society, right? It'd be pretty stupid. And so taxing digital power, which is the current tax treatment of Bitcoin miners. We actually tax Bitcoin when it's mined, not when it's sold. It's kind of like taxing an entrepreneur when they come up with a new idea before anybody buys it. It's pretty crippling. So I think we have hostile, unfair, irrational tax policies that impair the industry. I think clearly we want to change those. I think that we have blocked the industry from the banking system. That's kind of foolish. If you prevent banks from banking Bitcoin, it means the Bitcoin eventually will go to whichever bank in the world is willing to bank it. All of the crypto crashes, the crypto winter, the failures of FTX and Genesis and Three Arrows and BlockFi and Celsius, all of those failures were because the regulators prevented legitimate banks, well-run banks, from custodying Bitcoin.
Michael Saylor warns that control over the Bitcoin network means control over the future global economy. Without Bitcoin, he says, even basic digital transactions could become insecure or unfeasible. The implications go far beyond price action. If the US fails to adopt and safeguard Bitcoin, it risks losing financial dominance and ceding digital power to geopolitical rivals. Currently, US policy is holding the industry back. Bitcoin miners are taxed before realizing value, and banks are restricted from offering custody services. Saylor argues that these outdated regulations don't just hinder growth, they drive innovation offshore, pushing Bitcoin activity outside the US and into less regulated, riskier environments. Saylor believes the solution is straightforward. Unlock access, support innovation, and integrate Bitcoin into the core of American finance. If the US takes the lead, the economic upside is enormous. But if it continues to stall, the negative consequences, including lost capital, influence, and security, are already starting to unfold. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.